in terms of our strategy. There's no way we should have retained the assets, in the old world that we have, except for the younger people coming in, and people, not just younger, but people who are very interested in the research, how the world is going to work, not how it has worked. We're in the biggest moment of, disruptive innovation in history, with Bitcoin a prime example.
In a recent discussion with Cathie Wood from ARK Invest, 3 key topics were covered: Bitcoin's future in global financial systems, the increasing influence of institutional adoption, and the evolving landscape of crypto regulations worldwide. Wood emphasized how institutional involvement is shaping the conversation around Bitcoin and noted that its decentralized nature might shield it from geopolitical risks. At the time of this discussion, Bitcoin was trading at around $53,000, reflecting a 4% drop over the past 24 hours and a 7% decline over the past week.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
2015, we were intrigued by Bitcoin, had been intrigued since 2011 at my last firm. But at ARK, we could do something about it. GBTC it was the first year we could buy it. And so, and it's a security. We have to own securities in our ETFs. And so we wrote a white paper, and I did not write it. I have to give all credit to Chris Burniske. I don't know if you know Chris Burniske from ARK originally. Now he's he's a partner at Placeholder Venture Capital Fund. Just a brilliant guy. Fell down the Bitcoin rabbit hole, just could not pull him out. He was, and he wrote the paper. Could Bitcoin serve the 3 roles of money? And the second part of the paper was, what is this? What's the technology here? And so I have, I admire art so much. No economist, I think, is better than art. And I said, okay, I want to put this paper to the test. Let me show it to Art. And so we did that. And Art, there were 2 things that happened. He said, okay, there are 2 parts to this paper. One is technology. I won't have anything to do with that. So split it into 2. So we did. And then the other one was on economics and a global monetary system. And I remember after he got through, helping us think it through a bit, he said, this is what I've been waiting for since they closed the gold window in 1971. And I said, wow, this is a big idea. This is a big idea. How big could this be, Art? And you said, now this was when Bitcoin was at a $6 billion, we used to call it network value. I guess that more people now call it market cap, $6 billion back then. How big could this be? Well, how big is the US monetary base? And back then it was $4.5 trillion. Today it's about a little over $7 trillion. And I was thinking, wow, that's a big idea. We were doing our due diligence on GBTC and they so wanted us to buy. They opened up their books. I mean, we saw everything because our compliance team just was not going to have anything unless, we knew everything that could go wrong. And we had to go and ask the New York Stock Exchange permission to put it in the ETF. And they said, okay, up to 1%. So, but they didn't tell us if it appreciated, we'd have to sell it down to 1%. So we didn't. We wrote it to 10%. So it was a great, anyway, so Art, really, inspired tremendous confidence. There are 2 things that have inspired my own confidence. One was that conversation, and 2 was meeting core developers and understanding how much they understand about monetary policy, the global monetary system, rules-based monetary policy. So, but back to Art. Yes, that paper he blessed. And I have to tell you, from that moment on, I didn't look back. I was, this has not been an issue. People wringing their hands every time it drops, 95% or whatever, which it was back then. And we never looked back, and a large part due to Art. I think as I've tried to reconcile what our research suggests is going to happen here, after all, we are saying that we believe the price of Bitcoin will scale. I think to our bull case is $1.5 million. Let's go. As we move toward the system that you are talking about, Art, and already we are seeing the volatility is coming down. You know, when it was $6 billion in network value or market cap, the volatility was like unbelievable. But we're seeing the volatility come down, and the world you're talking about is, how far out do you think? We think that price target is a 2030 price target. And how will the conversation change? Because, I know that one thing the core developers will not do is change that 21 million units. One of the things that we discussed as you were reminding me of this history, my perception, again, just looking at charts going way back, was that the world you're describing, the world of private money, was a very volatile world. The output whipped around pretty dramatically. And I remember one of your answers was, and it resonated, was that yes, that's true, but if there were many crises, they were over in a few weeks. The adjustments were quick. With our monetary system, we get an 0809, and that built up over years and years and years. I don't think people understand that link, that really this started after 1913, the kind of depression that you just described. It didn't happen before.
As we just heard, Cathie Wood discussed Bitcoin's growing importance in institutional finance. Now, let's dive deeper into her insights on how regulatory frameworks are evolving to accommodate this expanding asset class. She also explores how decentralized assets like Bitcoin are increasingly viewed as a hedge against inflation and economic instability. Cathie emphasizes that Bitcoin's limited supply makes it a unique store of value during uncertain times. Let's now listen to her thoughts on Bitcoin's potential to revolutionize the future of finance.
One of the things that, of course, President Trump is animated about is trade. I think Larry Fink's conversion was very important. That was a moment. Remember, he was denigrating Bitcoin for years, very focused on the environmental side of it. But how is it perceived? Well, the first thing that happened was Grayscale, because it kept its fee at 2%, donated a lot of share to all of us. We think it was a miscalculation. And the CEO, who I've known him for a very long time, he quit. I think, and now they're putting, if you look at what they did with Ether, they've introduced not only the conversion into the Grayscale trust into an Ethereum ETF, but also an Ether mini for 10% of it. So the cost there is 15 basis points. I think I don't know if they're keeping it at the rest at 2%. I don't know. I don't understand the strategy. But first donated a lot of share, grew the market in terms of, beyond what Grayscale offered. So the education of 11 ETF providers vying for business at the same time, the education around that was tremendous. And you had most of the major asset management institutions involved, whereas, when we were in our early days, they thought we were using a marketing gimmick, or there was, always a reason not to consider what we believed was a new asset class. So first, donation of share to lots of other players, all of whom have educated. But the most interesting thing is it really has not hit yet, because the big platform, we call them wirehouses. So Morgan Stanley, Wells Fargo, Bank of America, Merrill Lynch, LPL would be an independent one, UBS. None has approved them for the platform. That we were told by the most progressive of all of them, we need 3 to 6 months. Okay, so now we're 6 months in. And I'm sure at one point, price hit 70. They thought, oh, we can't put, this is very volatile. We can't put our clients in this. We'll wait for a correction. The correction was much more shallow than they expected. There was one immediately after launch. But no one jumped on the recent one, which is interesting. So I think they're still trying to get their arms around it. They probably have to hire analysts to support them, because otherwise it's on the management team's backs. This is their risk. So I think they'll have to get a little bit of an infrastructure going. And we're starting to see that. We're also starting to see some demand pull from clients, which is good. That will get top management to make the investments in the research team to make this happen. So it's a slow process, but, despite what seems to be a wonderful success, it hasn't even begun. I mean, this is all deepening the liquidity of the market, which is that's a lot of what they're studying right now. How liquid is this market? Do we need derivatives? We'll wait for they will use, I think, when one goes though, the others will follow quickly. So I don't know if they'll wait another 6 to 9 months for derivatives. Maybe. I think someone will jump the gun before that, especially because it's become such a big campaign issue. And you've got, former President Trump, taking donations in crypto. Wow, that was surprising. But saying that he would guarantee the right to self-custody, very big in this community, right? Very, very, very big. Focusing on the miners and saying, yeah, America first. Yeah, we need them here. That's great. That was wonderful. And then, of course, what happened in Congress, the idea that the FIT 21, so Financial Innovation Technology of the 21st Century Act, FIT 21, got 76 or 78 Democratic votes in the House. Nobody expected that on Wall Street. Maybe that was becoming current wisdom, but that was big, I think, in terms of what I just said. The financial markets are waiting for cues to say, okay, it's okay to go. It's okay to go. Once I think financial institutions become comfortable with the liquidity, and they're going to start, and our industry has scaled because of, companies saying, okay, we can structure a portfolio in this way, and here's the return risk profile of this portfolio. And, advisors in particular know what the risk return profile, when they get that kind of information, like providing I know you've done great. You should be presenting this on how much more productive Bitcoin 2%, Treasury bond 98% would be relative to just bonds over time. And I think that will continue, and they will be onto it. But, and it's important too, because advisors are always thinking about risk, especially given the last 25 years, tech and telecom bust, 0809 meltdown, COVID, and so forth. So they're always thinking more about risk than return. And you're presenting them with a very interesting dynamic, which is, as we said, the 2 and 98%. This once we get some of these platforms to approve it, we're going to see all kinds of products like that. I started in the business. Really started in the early 80s in New York. Active equity management that's all there was, really. And then we hit the tech and telecom bubble and bust. We hit 0809, we hit COVID, and the risk aversion in the markets today. The reason that younger people like our strategies is for the same reason and they put up with the volatility, and ours have been extremely volatile, especially lately, is because they know we're doing the research and they know this is the way the world is going to work. So they will do the right thing, which is, okay, average in, or however they do it. I have found the fortitude of young people has been enhanced by the Bitcoin movement.
This interview provides valuable insights into the intersection of Bitcoin and the global financial landscape, particularly its expanding role among institutional investors. We'd love to hear your thoughts on a few questions. Do you think Bitcoin could become a dominant asset in global finance? How do you see regulations shaping Bitcoin adoption? Share your thoughts in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.